Why haven't all of these Fed rate hikes had a bigger effect on the real economy at this point? Let's ask Michael Darda. He's chief economist and macro strategist at Roth Capital Partners. Mike, I think this would actually be a fun thing to reflect on because we both would admit probably to being surprised at the resilience we've seen. And I keep going back to maybe it's fiscal stimulus that just, we were talking to a guest yesterday. They do tons of water infrastructure projects. He's got tons of business coming from the Inflation Reduction Act and so on and so forth. Jim Paulson and some others are trying to kind of tally up this gravy train that keeps running, so to speak. I'm just curious for your thoughts on all of that.
Hi, Kelly. Thanks for having me on. No doubt about it. I mean, this has been a unique business cycle in many ways, has surprised many of us, probably most of us, in terms of its resilience. And I do think it comes down to the fact that, yes, we had record stimulus from the monetary and fiscal side, and we had all these shocks from the pandemic, some of which have been reversing course over the last year plus that helped to give the economy a bit of a supply side boost, whether that's global supply chains or a boost in the labor supply. And Fed Chair Powell has talked about this. So we could just be in an environment where monetary policy still works, are simply longer. And just as everyone is lulled into this idea that there's no recession out there as far as the eye can see, and the Fed is either going to get it just right with the timing of their cuts, or in some cases, some folks are arguing they shouldn't be cutting at all. I still think it's a bit premature to embrace those viewpoints.
Right. If we waited a couple of months, we'd go, well, there's the effect. It hadn't quite hit yet. But let's kind of continue the thought experiment. If you were on stage there at Jackson Hole and given this assignment of why don't you think we've had a bigger, stronger, even quicker, I know maybe you'd say by historical standards it's not that unusual, but let's just presume this rate hiking cycle was so extreme that we would have thought maybe it would have had a bigger, quicker impact, and it hasn't. Why would you posit that is?
Well, I think it's actually fairly straightforward, but it's going to kind of be an unsatisfying answer, at least for most of the FOMCers, because they know they can't model and predict this perfectly. But the neutral interest rate has obviously been much higher in this cycle than the prior cycle. Mm-hmm. So that one was characterized by a massive financial crisis and a lot of deleveraging. And that's why short-term interest rates went to zero, stayed there for a long time. And yet, what do we have? A very slow cycle with very low inflation. A lot of people confused that with easy monetary policy, but it was just a very depressed neutral policy rate. And the Fed cannot run afoul of the neutral rate without creating upheaval in the business cycle. Now, the most recent policy error, obviously, was the Fed with its primacy recency bias, assuming that this cycle was exactly like the last, and they fell way behind the curve, and we had a 2-year inflation overshoot.
Right.
And they have caught up now. Okay, so now I think the risk is if they are at least in somewhat of a restrictive stance, and we know things are softening. I mean, look, the unemployment rate, we can debate on whether it's the labor force or weak hiring or some set of forces. But if the unemployment rate is moving up in a sustained way, and that was the case even before the July jobs figures, it means the economy is growing slower than the growth rate of potential, if it's growing at all. So that's a very different circumstance than where we were when the Fed was having to catch up with these 75 basis point rate hikes. And so this is why soft landings are so difficult, and only really one in the past. Sorry, go ahead.
I just want to make sure people caught that you said we've only had one soft landing in the past, and they are very difficult. Is it possible that the immigration surge, unauthorized workers plus legal immigration, both of those forces are a key part of the reason why the unemployment rate's been rising?
I think they're certainly part of the reason. I guess I'm not so relieved by that fact in terms of business cycle risk. I guess it's a unique circumstance, but if you look back at all the recessions since the end of World War II, about half of them featured a rising participation rate and half of them a falling participation rate. So it doesn't really undermine the key theme, which is that if you're growing slower than the growth rate of potential, the unemployment rate's going to move up. That means there's slack building in the economy. All of the things equal, the neutral interest rate then starts to move lower, even though it's been higher for most of this recovery than most have anticipated. And that's where you really do get into this risk that the Fed falls behind the curve and an actual recession unfolds with very high equity market valuations, at least if we're talking about the S&P 500. recession or not, when you're up at a 21, 22 forward multiple, the outlook for 10-year forward returns is exceptionally weak. And if something goes wrong in the business cycle, then even more so. I know there's a lot of optimism out there, and certainly this cycle is surprised to the upside in many ways. But, we could be at a turning point of sorts here. And so, I think we need to be a bit sober about where we are and what the risks are.
Indeed. I know you want a half point. I don't think they'll do that. So we'll get to find out what happens if they don't. Mike, you go ahead.
Oh, yeah. I just want to make this final point. Inflation expectations, forward-looking in the bond market, 5-year tip spread has fallen 60 basis points since the spring of this year. That means even if the Fed does 50 in September, they will not fully offset that. Does the Fed really want the real policy rate on a forward-looking basis moving higher at a time when the unemployment rate is moving up and the labor market's losing steam? That's what I would ask them if I were out there.
Well, we will see if we can get that question to them in the next couple of days, at least some of the officials who we'll still hear from. Mike and Klaus, thank you. Appreciate your time. Good to see you both. Mike Darda with Roth MKM.